People were expecting a much higher month in terms of added jobs. And in addition to that, there was also some revisions on prior jobs numbers that were taken into account in terms of market reaction. So with all of that, again, keep in mind, this is a huge focus now with the Fed. Afternoon. Hope you're enjoying a good week here. We have quite some interesting data to cover here this week. Jobs are very much in focus after the Fed press conference from last week, and the jobs number on Friday certainly spooked the markets quite a bit. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after every interaction. And certainly in each of these weeklies is hopefully to weed out some of the noise every week around the data in the markets and break through that to share things that really are moving the needle the most. And again, we have quite a bit to cover here this week in terms of market moving data. We'll cover some information around the job side of things. We'll cover a little bit on the ISM number that came out on Tuesday, and then we'll also talk a little bit about the earnings updates as well, and just kind of a general lay of the land of where we stand. So first things first, and probably the biggest thing in terms of market movements here over the last 7 days or so, is on Friday, we rounded out jobs week. So on Friday, we got the unemployment report and the unemployment rate and the employment reports. The unemployment rate bumped up to about 4.2% on Friday. Not hugely out of line with expectations, but it was a slight increase in unemployment rate. But more importantly, the employment report on Friday shows that we only added 73,000 jobs for the month. So this was a pretty big surprise on the downside. People were expecting a much higher month in terms of added jobs. And in addition to that, there was also some revisions on prior jobs numbers that were taken into account in terms of market reaction. So with all of that, again, keep in mind, this is a huge focus now with the Fed, but the markets were down pretty significantly on Friday, but did rebound quite a bit early into this week. So we will continue to watch this because, again, based on the Fed's last press conference anyways, the labor market is something they're really focused on at the moment. 1 month's data point is not going to, write the story, but it's something we definitely want to keep an eye out on for. So we'll continue to keep you up on the labor market as we go into each week here moving forward, leading up to the next Fed press conference there in September. In addition, we also had the ISM number come out, which was a bit below expectations, and this created a little bit of turbulence here this week as well. So certainly something to watch. Again, I think just the combination of the labor market numbers and then this ISM number are what kind of created some challenges. But on the brighter side, what I will share is that earnings actually are doing very well so far this year. Some of the numbers I'm going to share are actually from Friday of last week, so from the 1st. But nonetheless, hopefully this gives you a bit of a kind of a scoreboard of where we stand at the moment. But basically, U.S. earnings have been very strong. I think about 2/3 of the S&P companies had reported at that point. And the earnings growth was significantly more than expected at this point. Now, there's still a lot of companies to report, and so we'll see where we land when the chips have all kind of gotten in here. But nonetheless, so far, earnings seem to be very, very strong at the moment. Again, much higher than expectations, and honestly, quite significantly higher. All right, so that's a good win anyways in terms of the U.S. markets. But we will continue to watch that. Again, there are still another 1/3 or so of companies to report, and that could absolutely change these numbers. So nothing to take to the bank quite yet. The other thing to mention, be sure to tune in next week before I break for our question of the week from Terry. Next week, we have a good amount of stuff to cover as well. We have CPI, PPI, and retail sales. So inflation and retail sales, which obviously are also important as we talk about what may come here from the Fed moving forward. But great question of the week came from Terry here this week, which is really about U.S. and international, and more specifically towards earnings. And so I wanted to break this apart a little bit. Obviously, I just shared a bit on the U.S. side of the earnings season so far, which again has been very strong. Now, in terms of international earnings, it's been a bit of a different story. And the reason this has come up is because international has had a very strong year in market performance so far. Now, keep in mind, international is a very broad market, and it depends how you want to break this apart. So just keep that in mind. Depending on how you break this thing up, you might find different versions of where earnings stand at the moment. But in general, looking at one of the kind of more broad international market indices, At the same point there last Friday, what we had seen is that earnings were actually down slightly so far, and expectations were relatively high going into this quarter. Most analysts had kind of pulled that back a little bit, cut it in about half, after all the tariff news and all that. But nonetheless, disappointing actually so far, even from those revised lower earnings expectations. So this was a data heavy, earnings heavy weekly update, but I hope that helps give you kind of a scoreboard of where we stand. And again, I think the most important thing to highlight is the jobs, continuing to watch that and what that could mean for the Fed and obviously the market in general. And then the second thing would be the earnings updates, which will continue to keep you posted as things unfold. But so far, looking very, very strong. So hopefully that helps. Thanks again, Terry, for sending in that question. Hope you all have a great upcoming weekend, and we will see you next Thursday at 3.